Hello guys, I'm Mariano, the Trading Parrot. Up until Saturday, I've been quite bearish on the price action for the short term on Bitcoin. You can see 3 days ago I said breakout retest, or are we actually rolling over? But that day something made a click. If you watch those videos, I started challenging my own thesis, saying that potentially we could be forming a bullish flag on the 4-hour time frame. That happened 2 days ago when I say, could it be that this is a bear trap? And I woke up on Sunday seeing already the breakout confirmation. And by Monday, we were already enjoying hitting the highs on the price. In today's video, we're going to focus on that particular setup, the target that we are talking about, what's the current situation. I'll give you an update and we'll focus on the most important part of this breakout. What are we going to do with 137 million in ask liquidity located at 70K? We'll assess the chances that we can actually break through that. Guys, if you like this content, make sure that you're subscribed to Coin Bureau Trading. I put out 3 updates during the week in the channel. And if you want to follow up with the setups, you can also subscribe my channel, The Trading Parrot, this one in here, where I put 3 videos per day on the working days and 1 video per day on weekends. I cover Bitcoin long-term, swing trades for the short-term, and altcoins as well. Overall, the picture when looking at the monthly chart is looking fabulous. You can see in here a big green candle, very typical for an October month, which tends to be extremely bullish. In my opinion, the make or break month is going to be November. There's not just the elections, but typically it's November, the month that challenges everything. You can even see some months in the bear market in October with an uptrend, and it's November the one that could spoil the party. At this time, in terms of seasonality and in terms of halving events, highlighted by these orange arrows, you can see that it's rare to see a November that really destroys the whole thing. But when looking at other years that are not equivalent to this one we are, November can be pretty much a party spoiler. We covered this chart this morning, but it's very important that you are aware. We are having a bullish cross of the 50 moving average daily above the 200. I don't necessarily trade these particular bullish crosses, but it's going to have definitely a psychological effect in the markets. This is because this particular choice of moving averages is very popular, not just for Bitcoin traders, but in general for moving average traders. Also because last year we had also a bullish cross in October. Supposedly tonight it should confirm the cross. Yesterday still it closed the candle without crossing. As I've been explaining in the past days, we are going through a period that is extremely weird. We have all these institutions buying like crazy. Since the 11th of October, the ETFs are pretty much adding at an extremely fast pace. You can see the parabolic move from 18.8 into 22 in just a few weeks, very similar to the beginning of the parabolic move that we have early this year. We also have the big whales in our favor in an area where they are mostly doing withdrawals, as opposed to all the deposits that cost pretty much each and every retracement in the past 8 months. But as I keep saying, there are no signs of retail. Numbers are record low when it comes to spot buys from retail. Google Trends searches for Bitcoin are extremely low, probably comparable to what we were having in October 2020, right before the last leg up, the strongest leg up. So let's go into the short-term setup. I'm going to focus on giving the update and what are the current risks for this setup to continue going higher. What we are seeing here is the CME. CME over the weekend goes offline on Friday and it closed with a price of 67.2. That is the price in the market CME. In spot or in futures on most of the exchanges, that price is roughly 200 less. And the market went offline, and on Monday after opening was already above 68.175. That means that there is roughly 1K gap here below the recent bullish move. And the way I read that is we have something pending, and leaving these businesses behind and trying to move on is a little bit tough. Many traders are going to be pointing at this as if there was some sort of doom that we cannot move higher this week or in the next upcoming weeks. And just so you know, there is one at 54 to 54.5 and we still have moved to the upside. But in the favor of this strategy based on CME gaps from the weekend and from the week, apart from the 54 and the 20K, all the rest of the gaps have been filled, which confirms that CME gaps close over 95% of the time. I do not have the precise statistics, but just from gut feeling, most of them close in the following days after the weekend, and just a handful of them take longer than a week. So this particular aspect, together with the previous CME gap at 54, is adding up against the potential for this to survive crossing 70K. We still can cross 70K, but is a point against it. The second point against it was the bearish cross on the MACD. Every time we had a bearish cross on the MACD daily time frame, we experienced drawdowns of 20% or more. But in our favor, since Sunday, when we recognized that we were heading to the MACD bearish cross, I started saying that we are also within this ascending channel on the MACD. And why that matters? Because that means that each and every time we are having the bearish crosses at with an actual smaller target, smaller drawdown, less pain. For example, this one triggered roughly at 67K and it bottomed at 49K. And the next one that crosses above the zero line confirmed at 63K, and the bull cross came almost right after and in the positive area. We have some bullish crosses again around here in September. The point is, I wasn't expecting to see a bear cross below this channel or below the zero line. What I wasn't expecting is to see the bull cross almost immediately after. This bull cross that we are currently seeing is pretty much a couple of days after the bear cross. And as long as Bitcoin can hold at this level, very close to 70K for a little bit longer, possibly tomorrow it's going to be confirmed as a bull cross once again. I take a lot more serious bull crosses that are below the zero line. This is just a signal for a continuation, and in my opinion, it's not a signal to start a new deal unless you really want to take a big risk, or at least a larger relative to entering from below the zero line. And continuing with the setup, so far is looking pretty healthy. In the morning video, I mentioned that I'm using this trend line to measure the healthiness of the continuation. This line won't tell you the top if this is the top, but it will tell you once you hit support, if you bounce, if you have higher chances of continuing to the upside versus breaking below the trend line, putting the setup at a lot higher risk. And as you can see, so far with this candle that is still in progress, there's still 2 hours and 15 minutes to close it. But where we are, which is 69.2K more or less in Bitcoin price, we are at an RSI of 67, which is higher than 65. So far, higher highs, higher lows. The move started to become a lot more impulsive relative to what we were seeing in here that was just creeping up slowly in all this area in here. We were right next to support and eventually we hit resistance on Sunday at 1 p.m. UK time. If you haven't watched any about this setup, the whole idea of this setup is that it actually challenged the rolling over that we were talking about up until Saturday. We started by thinking, yes, this looks like rolling over. That is the main scenario that is playing out up until now because we have lower lows and lower highs. But if we manage to put a higher low, which we did on Saturday, then we started looking for potentially challenging the top trend line. Another thing that gave us a strong clue was the supporting line that initially I had it like this, then I corrected like that, and then I noticed that it was tested once again during the USDT DPEG. And that left us thinking we might as well hit the top of this trend line together with the top of the trend line of the RSI, break, retest, and continue higher. And that's precisely what happened while I was sleeping from Saturday to Sunday. And now we are looking for a complete target of 74.6. On Sunday video, I say this is our best chance to hit those pretty much all-time highs. I gave you an update as well on the Discord server on CoinBureau. Pretty exciting to see that now is still playing out, regardless of having that huge liquidity at 70k that we're just gonna look in a few seconds to see how it's evolving. On the daily time frame, finally we are once again above the trendline resistance here that has caused massive dumps. We were also saying that the shorts must be thinking, while the price is even below that trend line, why is not crashing in a similar fashion that it did so many times when it was testing that trend line? And that was putting a lot of stress on the shorts. Possibly, and I will expect this, many of them started closing their positions, adding to the buying pressure that helped the price stick around once again above that trend line. At the moment, the daily candle is at the same price that it managed to get here at $69.30, which, as you can see, coincides as well with the CPR first resistance for the month of October. I have some alerts placed there. You can see them are constantly triggering because for me it's extremely exciting to see that we are hitting that resistance and we might as well get above it and start targeting the next resistance of the month of CPR. The second one is located at 74.6, which is the target at the same time of the internal pattern that we are seeing on the bull flag. The bull flag is not visible here. You have to go back to the 4-hour to see it, but the target is the same price. And guys, these are just probabilities. I'm not saying there is 100% chances we get there. We need to sort out some resistance at 70k, and no one on earth knows if we are gonna be able to achieve that. But again, here on the daily time frame, this pattern looks pretty cool as well. It's almost like a double bottom formation, and at the same time some sort of bull flag that has already broken to the upside. So it looks bullish, but we need the daily to close there and the 4-hour as well to hold. And I don't mean to scare you, but I want to show you at the same time what's going on under the hood, what could put this move at risk. This is the open interest of the past 8 months. And we can count victory in the sense that when we were at 15 billion, we were claiming we are due for a full move to the top of the range. And hopefully that time we break the resistance of 21 billion. And we did it. And that is amazing. In the past week, we also say we might come back down, but hopefully if we come down, this line comes to the rescue, which is good and bad. It's good because it play out and I'm happy that we are bouncing in our support. Great. But we are at the top and we continue to reinforce the idea that this whole structure in here is an ascending wedge, which is very obvious when you look at the open interest only. When you look at the price, it's a little bit more difficult to place the line and it's not really evident that you got an ascending wedge, maybe, possibly, maybe not. But on the open interest is almost perfect. I mean, give me a little bit of room in here to claim that it's almost perfect. And what is the problem with that? This is a bearish pattern. And we are pretty much at the top there at 22 billion, about to close the first daily candle almost at 22 billion. And if we look at the CBD of spot, it's telling us that pretty much what people are doing is just selling their holdings in spot. And that is not great for this move, okay? So this is a point against that this can really hold. The point in favor is that whenever price of Bitcoin pumps, the open interest acts as a leading indicator and it tends to do the move before the price because people open huge amounts of positions, and if that survives and we don't see a flash of that open interest, then we move into a new area where we range. And my expectation has been that if we survive this and we manage to put an all-time high, open interest may start playing somewhere in here instead of continuing endlessly for longer than 8 months in the same range. And for that to happen, what we need is to see that spot is actually buying. And you can see in this move up of the price, in this breakout, CBD was buying. People were buying Bitcoin in spot up until 73.5, which is where I sold. And then on futures, they also took some trades. But at the moment, what I'm trying to tell you is that this whole move that we are having at the moment is pretty much driven by futures. And that makes it a higher risk move. The weekly time frame on the RSI, on the stochastic RSI, is looking fantastic. The megaphone pattern pretty much has done everything that we need except for the impulsive move of the last leg of this arrow that we placed in the chart in July. I have done some cheating. I have adjusted a little bit these things to match things, but the nature, the higher highs and the higher lows have been placed, and you can go, you're welcome to check my videos from July. This is what we were expecting to happen in here. And it's not because it came out to my brain like I'm reading a crystal ball, but pretty much because I started looking at the previous performance of megaphone patterns that are located in the surrounding areas of a halving event. And maybe also by watching some Benjamin Cowen as well. Let's give him some credit. And let's look at the liquidity pools on the scalping chart. This is a 15-minute chart, and let's see if there's still motivation for the price to continue on this impulsive move, on this breakout. And I think there is. On the scalping chart though, we can see that stimulus ends very close to 70k. And I wonder that selling wall at 70k, if it has anything to do with people just watching that area in here and thinking that's where the liquidity pool ends. So it's fair to short 70k or something. Below the price on the scalping chart, we have the 65k and the below 60s. This chart, the scalping one, only tracks very short-term levels of liquidity, similar to what you get from CoinGlass and other websites that are available for free, which could be influencing all the selling that we are seeing in the order book. Look at Binance, for example, on spot. This continues to increase. Now it's at 619, right at 70k, $50 above actually. What people, if they're using that to sell, it's pretty silly, because if you use trading different and you look at liquidity pools using this website, which is a lot better, you can see that targeting 70k as a liquidity pool, it is packed with liquidity. It makes a lot of sense to go slightly below that 70k and hit it. But what I see is that liquidity after 70k becomes way larger right after. We have 54k. You can monitor the number right here, but when I'm hovering the actual area of the chart. 54k at the top in yellow. Then we continue at 69.9k in the price with 54k again, and then above 70k it becomes 63k, and then 69, then back to 61, and then it becomes a little bit thinner again. At 72 there is 59, but then we start getting 84. And what I remember is that roughly around here at 74k, the liquidity is even 105, which almost doubles what they can squeeze out of 70k. And since all of these levels are pretty heavy, the aggregated volume that they can liquidate in here is measured in tens of billions. So just stopping there at 70k seems to be either a very silly move, or is the actual market maker that wants to hold the price, prevent people from getting too overexcited as a psychological resistance. Or as I was saying in the morning as well, that possibly they are trying to repeat the same strategy that they did right before October in 2023, which is to place 134 billion psychological resistance that never gets filled. You can see that there is a gap right there. It never gets filled, but still it sells 5k down to 39k, and then it makes the 200% move to the upside. We still don't touch 70k as far as I know. I'm gonna check in a second, but if the price was to repeat that, I believe that we are too damn close now to do precisely this, and I don't see any fear at the moment in the price. The price continues to creep and getting closer and closer to that 70k. At the moment, the price is still 69K and is above this level of resistance. Hopefully, by the end of the day, it closes above that, giving it another point in favor to eventually being able to break that resistance. I'm really curious if they're gonna pull out all those orders right before hitting them, or if someone knows something and they're just gonna make the trade of the year by shorting 70K. One of the motivations to take that long on Sunday was thanks to using this data from Trading Light that shows the net longs versus shorts. We've been monitoring this channel since August, showing the areas where shorts are overextended and when longs are. And you can see that in late October, we've been looking for an area of interest in here because we're touching the trend line. We had the breakout that happened on the 25th. We talk about retest in here, and we are now in the middle of the range of longs versus shorts, which typically promises or offers additional upside after that. That's based on past performance, not guaranteed. So I think the play at the moment is to monitor what happens with the daily close, if we can hold the W pattern in here, to monitor what's going on with the liquidity if we start getting very close to that, whether they pull it out at the last minute or if they're really willing to execute it on spots, particularly on Binance. At the moment, an entry for long is very high risk. We have a big delta putting longs at risk. We have all that open interest that I mentioned earlier. We have no buys on spot. So I think riding this trade, the way to go is to go with a very tight stop loss. Enjoy it, and hopefully by tomorrow is still there. Guys, if you want to trade Bitcoin altcoins and you want to choose an exchange to do so, something better, have a look at these top 3 exchanges that I have in the description. I love using OKX and Bybit. Those are exchanges that offer trading at a very high quality and incredible bonuses. But typically you're going to need KYC to open a new account. Bluffing offers also quite a substantial bonus using the links in the description and discounts on fees. But the actual benefit of bluffing is that you can open an account just in 5 minutes, no need to do any KYC, just deposit and you can trade on spot, leverage, futures very quickly. Tomorrow update on the trade that we're talking about is going to be on the Trading Parrot, so I invite you to subscribe the channel and don't forget to subscribe as well. CoinViro Trading is a no-brainer, videos every day. I'll see you on the next one. Bye bye.